Hello ladies and gentlemen, good morning. I'm Joseph Novichkov, Senior Analyst at GDMFX with today's market outlook. As tradition, as we mentioned, we're starting with the Japanese yen right now. It dropped to a 7-year low against the dollar on speculations Mr. Abe will win elections and extend his economic stimulus program. Japan's currency declined versus all except one of its 16 major counterparts. A gap of the dollar headed for its highest close since the year of 2009. The price for the USD JPY is down to 118.40 after reaching a new high 119 earlier in the Asian session today, as minutes from the Federal Reserve's latest policy meeting shows the US moving towards higher interest rate while Japan pursuing further economic stimulus. In UK, the local currency, the pound, was the day's biggest gainer, strengthening after minutes from the Bank of England's latest meetings showed policymakers beginning to raise concerns that inflationary pressure may be building. The pound rose 0.3% to $1.5682. However, the downtrend is still intact. The Australian dollar dropped for a second day as HSBC Holdings and Markit Economics said their preliminary purchasing managers index for China fell to 50 this month from 50.4 in October. Numbers, of course, as we know, above 50 indicates expansion. China, Australia's largest trading partner, is heading for the slowest full-year growth in more than 2 decades. The Aussie slid 0.4% to 85.81 US cents after declining to 85.67 cents, the weakest since November 7. The euro, the shared currency, is building some down pressure as the $1.2580 per euro is seen as a major resistance. However, the downside is also limited to $1.24 for today. Gold in the commodity sector, miners' costs are mostly higher than the current spot prices, increasing the likelihood of writedowns next year, according to Nick Holland, Chief Account Executive Officer of Gold Fields Ltd. Across the industry, costs are about $1,300 an ounce, including debt repayments. Gold dropped 0.1% to $11.82 an ounce, bringing the decline since the beginning of 2013 to 29%. Gold declined to $27 yesterday, as predicted. West Texas Intermediate traded below $75 a barrel as U.S. crude inventories increased and investors weighed the likelihood of OPEC reducing its production. Futures were little changed in New York after 3 days of losses. As we mentioned, stockpiles in the U.S., the world's biggest oil consumer, expanded by 2.6 million barrels to 381.1 million last week. The Energy Information Administration reported that yesterday. Further declines are expected up to the OPEC meeting, which is next week, 27th of November. And of course, the important economic events today: 13:30 GMT, US CPI, existing and continuing jobless claims for US as well. And at 15 GMT, existing home sales, also for US, and also at the same time, the European CPI. That's all for today. Keep an eye on the economic calendar. Mid to high volatility expectations for today. Thanks for watching. Bye-bye.